attending college, opportunity cost is you would be earning 15,000 as a waiter. C, you would be earning 20,000 as a carpenter. This is New Jersey. This is New York. And you would be earning 10,000 as a guard in California.
Sir, I didn't understand the A.
Attending college.
Oh, okay.
The attending college. So what is the opportunity cost of A? Opportunity cost of A. What is that?
0.
How 0?
You don't earn anything.
Okay. Let's just again see the definition here. Read that. The potential benefit that is given up when one alternative is selected over another. Now, you have 4 alternatives. You decided to attend the college. If you would not be attending the college, you would be number 1. These are priorities. 1 priority. This is number 1. This is number 2 priority, number 3 priority, number 4 priority. If you choose to attend college, yes, you choose that. What is the opportunity cost? You would be either earning 15,000 as a waiter in New Jersey. 3, you would be earning 20,000 as a carpenter in New York. 4, you would be earning 10,000 as a guard in California. What is the opportunity cost of attending the college?
15,000.
You said 15,000. Pinyo. Coco, you understand? Did you understand the question as well? Your mic is still on mute. We couldn't hear you.
Oh no, I said like I understand, Mama.
Okay. So now look at again the definition here for opportunity costs. The potential benefit that is given up with one alternative is selected over another. So you see there is a priority here. Two priority, priority 3, priority 4. Right? If you are not attending the college, you would be, your first choice is going to be earning 15,000 per year as a waiter in New Jersey. 3, earning 20,000 as a carpenter in New York, or earning as a guard salary for 10,000. So the definition you can develop like that. The opportunity cost of attending college is the next best alternative that you forego to attain the attending of the college. So 3 cannot be your opportunity cost, 4 cannot be. Some students, they just add it up. 15,000 plus 20,000 plus 10,000. Okay, it's 45,000 is your opportunity cost. No, foregoing the one alternative. So that is a point here, right? One alternative here, not summing up all the alternative. If I'm teaching here, I may be having 1,000 options over there. I could be spending time with my wife, my kids, spending time with friends, going to the dinner, going for somebody else's wedding ceremony. I would be traveling, could get appointment to the doctor, dentist, going to the gym. I could be having multiple, meet my family, paying visit to my mother, taking my mothers to holidays, many alternatives. But which one is my opportunity cost? The next best alternative that I forego. At this time, it's a dinner time. So I forego the dinner to attend this class. So my opportunity cost is just for in yuan, 100 to 120 yuan for dinner. That's it. Right? So if I choose the cost and benefit here, my earning, of course, going to be greater than 120 yuan. So I choose the benefit of earning more than my dinner amount. So that's why if my dinner cost is going to be 1,200 yuan, it's a huge party, huge ceremony over there, then I would be definitely thinking about that. This course is going to be giving me less than 1,200. Okay, over there, I could be earning more, more than this. Not I would be eating that 1,200 plus value of the dinner. So then I would be thinking about that leaving this class. Right? So this is how we base our decision based on opportunity cost. So that's why I would talk about that classification of cost based on decision. Right? Differential cost, opportunity cost. Now sunk costs. So pay close attention to this word, sunk. Sunk means drowned. That's it. So that cost which you cannot pull up, which you cannot recover, which you cannot get back, which cannot be returned. So that cost which you already incurred but cannot return, cannot receive any further benefit, it has to incur, we call this sunk cost. Sunk cost which has already been incurred but cannot be changed or cannot be changed now or in the future. These costs should be ignored when making decisions. Ignored making decision. Now you tell me, attending this class online, what is your sunk cost? Which already incurred. So whether you attend this class or not, you already paid that in advance. Which one? Can you? Subhan, Junpyo, Constance.
Maybe listening to other class, other lecture. Is it sunk cost?
No. That is the opportunity cost. You prefer managerial accounting over other classes.
Time? Like the time we're gonna consume?
Time is the opportunity cost, not the sunk cost.
Oh, it's
Now look at the definition that already been, before entering this class, you already incurred that one, but you cannot recover that cost. Still time is going on, not you spend the time. Subhan,
It's already sunk cost, sir. Like already I have paid it. I can't get it back.
okay, the Wi-Fi cost. You already paid it, whether you, in advance, whether you attend this class or not, whether you go out for dinner, leave this class. Can you say to the company, look, I had a 3 hours class and I cannot, due to I went to the, my party or my dinner or with someone, but I couldn't attend the class, so give me my 3 hours money back. It's sunk. No, you cannot recover that. Right? So this is called sunk cost. So we have the example here. Suppose you had purchased gold for 400 an ounce and now you are selling it for 250. So can you recover this cost? 400? No, how much you have recovered? Only? It means how much is sunk? 150. So can you recover this 400? No. Right? And if you say that I would be selling it at 400, then 400 is your sunk cost already been incurred. And how much you recover? Only 250. But did you sell it? No. You are selling right now. You didn't sold yet. So your sunk cost is already incurred. Similarly, research and development cost is sunk cost. For example, the gas, petroleum companies, they were given huge budgets, millions of dollars to search oil in the sea, on mountain areas. They go and then they drill millions of dollars of worth machinery and all those stuff. And at the